And silver, I think it went from 20 million to 60 million ounces. But silver is particularly vulnerable now to a supply shock. And here's why. Central banks hold gold as an asset, as a reserve. It's a tier one reserve. So you can hold it like a treasury. Um, so there's a lot of gold lying around in the system that just sitting there. As the Bank of England has said, they've got over 400,000 bars of gold. But it's usually just sitting there. Right now, silver, the stockpiles of silver are not the same. They're much more sensitive to demand because silver is more of a commodity metal, and the available supply has been drawn down much more sharply. If you look at the London Bullion Market Association figures for how much silver they have, they've lost about 30 or 40% of their physical silver, and it's getting close to a tipping point where in gold they've lost 3 or 4% of what they've held. So silver is much more potentially sensitive to an actual physical supply shock. And if you're a producer and you're going to need silver to make EVs or solar panels or other things that silver required for in production, it makes sense for you to pay an interest fee to have it here in the States, already here, to own it, to pay financing on it for 3 to 6 months, than to be subject yourself to a potential tariff if tariffs are enacted. So this is what's driven the whole thing, and I think silver's much more ripe for potentially a supply shock and then a price gain on the back of that if it can break out, which it's trying to right now over 32.50. It's testing. So, and compared to gold's run, the gold to silver ratio today is about 90 to 1. I haven't crunched it in the last couple of days, but it's high. And silver's undervalued relative to gold.